Hello and welcome to today's edition of The Exchange, brought to you by the New York Stock Exchange. I am live on the floor with Andy Reid. He is the head of investor behavior research at Vanguard. Andy, thanks for stopping by.
Thanks so much for having me, Doug.
I want to talk a little bit about some of your recent data and publications you've put out around investor confidence. And it seems like in your data that investor confidence is actually soaring right now, even though inflation is sort of rearing its ugly head. What is that? Where's that all come from?
Yeah, I think what we're seeing is a fairly nuanced view that our investors have about the market, the economy, inflation. So on the one hand, they're sort of reacting to the fact that the market's reached an all-time high recently. Like when we did our survey back in April, what we found was that investor expectations were really riding high. So our research suggests that investors, when they think about the future of the market, so projecting the next 12-month returns, they tend to anchor on the past 12-month returns. And insofar as the market's been doing really well over the last 12 months, people are getting more and more bullish, more optimistic. Now, at the same time, they're not ignoring the reality of the other side of the equation, which is inflation is running hot, right? So when we asked folks, what do you think inflation is going to be like over the next year? We saw that the average expectation is around 3%, which was pretty much on par with how things were running back in April.
So we think about some of this optimism, how do you kind of compare and contrast that to history, right? I mean, even if we start to go back to the pandemic, other times, what are we seeing in terms of differences?
Yeah, it's a great question. So the challenging thing is the last time we saw optimism of this level was around, February of 2020. And I think we all know what happened lately after that. We do see that investors are pretty quick to change their expectations. So as market conditions change, they do react. So expectations are pretty fluid. What is encouraging though is that they're not panicking, they're not making, rapid fire moves in their portfolio. So the portfolio tends to be relatively stable. And of course, we encourage investors to stay the course, stick to your plan, no matter the market conditions. And we are seeing that type of behavior by and large at Vanguard.
Curious now about ETFs. What are you seeing in terms of investor behavior? Are you seeing them track towards ETFs? Are you seeing money movement? Are ETFs on your side of the business becoming, an investment of choice?
Yeah, it's interesting. I think what we're seeing is that older investors are sort of both sticking with mutual funds and also increasingly gravitating towards ETFs. For younger investors, a lot of them are choosing ETFs over mutual funds. So there is that cohort shift that we're seeing across time. I think this is in some ways a good sign. People are wary or aware, cognizant of the price advantage of ETFs. And ultimately, we think that investing in low cost, balanced, diversified investments like, equity ETFs is a good thing for especially younger investors just getting started. They have long time horizons. They can reap the benefits of compound growth over potentially many decades.
And of course, here at the home of ETFs, we love talking ETFs. You also produced recently an investor bias report. And in there, you discuss a little bit about trading ETFs, right? We're here, we're at the home of trading.
Yeah.
What are some of the suggestions that you talk about in there?
Yeah, so I think one of the things that we noticed is this fundamental phenomenon that's been referred to as the disposition effect. So what we saw in our research is that investors who held a common total stock market ETF were less likely to sell when they had unrealized losses versus when they had unrealized gains. So they were essentially delaying realizing losses and expediting realizing gains. We do see this for other investment types as well. In general, the pain of losing is a greater motivator than the pleasure of gaining. And so there's this weird phenomenon, it's called loss aversion, and it affects all sorts of investor behavior. I think at the end of the day, what we really emphasize is keeping that long-term perspective, sticking with your goals, staying disciplined, and not overreacting to market events. But at the same time, if you have a portfolio with a mix of investments that are doing well, some that might be underperforming, don't succumb to the temptation to avoid that loss at all costs, right? So being willing to give up on an underperforming investment, I think, is really important for achieving long-term success.
Now, for an investor, for an advisor, they're listening in, they want to read the research itself. Where do they go?
Yeah, so we have all of our research goes on corporate.vanguard.com, so our main site for thought leadership. And we're producing articles and research insights and white papers on pretty much a weekly basis. So we love to kind of get the information, timely and relevant insights that people can kind of hopefully put into practice and learn from.
And if you're looking for additional timely and relevant ETF thought leadership, you can find it all at our website, etfcentral.com. Again, go there now. You'll find our latest webinar series all about ETFs, brought to you by the New York Stock Exchange, the home of ETFs.